Hi, my name is Alexander Prosens, and I'm going to be doing my presentation on brief exercise 11 of chapter 3. So basically the problem is, and I don't know how to fix this, but basically everything I write is backwards, so I'll do my best to explain what I wrote. But the question is going to be, from the ledger balances below, prepare a trial balance for Yeager Company at June 30th, 2014. And it also mentions all account balances are normal. And then I went ahead and listed all the accounts in the brief exercise. So we have accounts payable for $1,000, cash for $5,400, common stock $18,000, dividends $1,200, equipment $13,000, service revenue $8,600, accounts receivable $3,000, salary and wage expense $4,000, rent expense $1,000. So again, it wants us to create a trial balance. And so a trial balance is just basically going to be a list of the accounts and then their balances in either the debit or credit section. And this is used to mathematically show the equality between our debit and credit. So what I wanted to do, and I've kind of written this down on a separate whiteboard, but some rules that I'm going to refer to as we complete this trial balance. And so if you notice, the first set of rules that I am using is the rules that I found from the textbook. So basically it gives us a guideline for how we are going to determine whether an account balance belongs in either the debit or the credit section. So here we notice that debits are going to increase assets or decrease liabilities, and the same is, or the reverse is true for credits. So our credits will decrease our assets and increase our liabilities. Now, right underneath that, I've written out the extended the extended general accounting equation with the credit debit rules. And so I referred to that often while completing this assignment or this exercise, and it was actually very helpful. And then the last bit was in the last section, and that's basically our trial balance organization. So it will be first organized through assets, liabilities, stockholder equity, revenues, and expenses. And if you notice, it follows very closely the extended general accounting equation. So we'll be referencing those rules often as we go through. So kind of our first thing here that we're going to do is actually begin creating our trial balance. And like most financial statements, we are going to set it up first by stating the company name, the name of the financial statement, and the date that it's being prepared for. So I'm going to go ahead and write that, and we can find all of this information in the question itself. So basically we are creating this trial balance for the Yeager Company. So I'll go ahead and write that up here at the very top, Yeager Company. And then the name, and as it's asked, we are going to create a trial balance. So go ahead and write that directly underneath. And then lastly, the date that it's being prepared for. And that would be June 30th, 2014. And so that is the basic outline of our balance sheet. Again, I apologize that it appears my writing is backwards. I actually tried writing backwards a couple times and it got quite confusing. So I'm just going to stick with this, and hopefully we can manage. Anyway, so kind of our first step here is to identify these accounts as either increasing or, well, first of all, are they liabilities or assets? And once we determine that, we can determine whether they're increasing or decreasing the liability. And that will tell us whether the account balance belongs in the debit or the credit column. And then once we've sorted all this out, we will then take a sum of each of the columns. And if we've done it correctly, then those amounts should add up to be the same. And that will show us that we've performed or created or prepared the trial balance sheet appropriately. So let's go ahead and get started. Again, if you'll notice in our rules, it's going to have us create the trial balance in order of assets to liabilities to stockholder equity to revenue to expenses. Sorry, my hand's in the way there. So we will start with our assets and kind of determining which of these balances or accounts fall under the assets. So if we notice up on the board, we have a couple here, and they're all kind of mixed up. So we need to mark which ones are our assets first of all. So I'm going to go ahead and do that. So the first one that we can see that is going to be our asset is cash. Obviously, that's one that is kind of a given. And the only other one that I see here would be accounts receivable. Okay. From that point, oh, you know what? Actually, our equipment is as well. Sorry about that. So our equipment, we have 3 assets here. They're going to be our cash, equipment, and accounts receivable. Not in that order. It will actually go up cash, accounts receivable, and then equipment. Then we'll kind of move on to our liabilities. So let's point out our liabilities first. First, we have accounts payable at $1,000. Then kind of our next thing that we're going to go to is actually our common stock and dividends. And these will all be considered liabilities, kind of falling into different areas of the equation. Obviously, accounts payable and common stock and dividends fall into separate categories within the liability section, but for the sorting out reasons, we'll kind of just break them up into assets or liabilities for the reason of finding whether or not the balances belong in the debit or the credit column. So after our common stock and dividends, then we're going to actually include our service revenue, which would, to me at least, seem like it belongs in the asset column, but it does in fact belong in the liability section. Followed up by then our expenses, which are here at the bottom. So we'll have salary and rent expense. So now that we've kind of determined, or we have determined, which of these accounts are assets and liabilities, now we can begin to apply our rule. So we will start with our cash, and we will now determine whether that cash is going to increase the asset or whether it's going to decrease. And as we know, obviously, our cash is going to increase our assets. So we are going to classify that under a debit, under the debit column. So I'll go ahead and write that right up here. So we have our cash. And we're going to go ahead and add a 1,000. I'd like to add that money sign on the first entry on each column. So we'll do that as well. Next, we're going to have our accounts receivable for 3,000. And we'll use the rule again. Is it increasing or decreasing? And it is increasing. So we will go ahead and put our accounts receivable up here, and accounts receivable was again 3,000. So we'll go ahead and write that, kind of stretching myself here. And then lastly, we have our last asset, which is going to be equipment. And the question we need to ask ourselves again is it increasing or decreasing our asset? And the answer is it is increasing. So we'll go ahead and write our equipment up here. Hopefully I have enough room at the end of this. So our equipment is, our balance on our equipment is 13,000. So we'll go ahead and write 13,000 up there. All right, so now at this point, what we'll do is we will now sort out our liabilities. And so as we go through that, some of them will get a little tricky, and I'll kind of explain how I sort out whether or not their balances belong in the debit or the credit column. So kind of the first one that we're going to look at is our accounts payable. And so I guess, first of all, let's determine it is a liability. And so is it increasing or is it decreasing the liability? And as an accounts payable goes, it is actually increasing our liability, which would mean that it is going to fall under the credit column. So we'll go ahead and put that in here. So we have our accounts payable, and we will actually, I have to stand up. That is going to be an amount of 1,000. So over here in our credit section, we will list a $1,000 credit. Kind of as we move on, we're going to go into our common stock. And again, we do classify it as a liability. Now the question is, does common stock increase or decrease our liability? And here, if you notice in the extended or expanded general accounting, we're going to be adding our common stock. So it will in fact be listed as a credit because it will be increasing our liability. So we'll go ahead and do that. Our common stock is listed at 18,000. Right, 18,000 in our credit section, or column, excuse me. Dividends. Dividends is one of those that I mentioned that is going to be a little different. So if we notice in our expanded accounting equation, our dividends here at the end, that's kind of smashed, is actually going to be subtracting. And so is it increasing or decreasing the liability? And that's kind of the question here. So it actually would be decreasing our liability. So we would classify the account balance as a debit. And that one's a little different. So we'll go ahead and do that. So we'll write our dividend here. Dividends, excuse me. And that was listed in the ledger as 1,200. So again, yeah, I almost wrote it in the credit section, but it belongs in our debit section. Now moving on, we will move on to our service revenue. And the area that our service revenue falls under is going to be our retained earnings section. And so if you notice in our expanded equation, our retained earnings is adding to the liability, not subtracting. So our service revenue is going to be listed under the credit column. So we'll go ahead and put that in there. Service revenue. And that will, again, fall under our credit. So if we look over here, our service revenue is 8,600. And then basically just to wrap it up, we're going to have our salaries and wages expense, and our rent expense. Now, if you notice our expenses, and I abbreviated this, so I apologize, our expenses are actually going to be subtracting. And so when we see that, our expenses will be decreasing our liabilities. So our account balances will actually be listed under the debit section. So we'll go ahead and classify those and add them to our trial balance. So first of all, we are going to have our salaries and wages expense. I'll just abbreviate that. And again, that is going to be falling under our debit area. And then lastly, our rent expense. You know what? I can probably sit down for this. Our rent expense at 1,000. And so we'll go ahead and write that. So now we have just about finished our trial balance sheet. And again, I apologize that it seems a little backwards, but if you have followed along, I have broken down all of these accounts in the order that they're supposed to go into, following our rules kind of here at the bottom of this rule sheet. So we started with assets, we moved on to liabilities, we then took on our stockholder equity with our common stock and dividends, and then service revenue. And then we also went into our expenses. And so it has been broken down basically in the order that it needs to be, with the credit and debit columns filled out as they should be. So now the moment of truth would be to add these two columns together and make sure that our math is correct. So we'll just put one line here and one line here and calculate our totals here. I'm wondering if you can see this. Okay, so I've got my calculator here on my iPad. The reason I have it on here is so you can see. But we'll basically just go down the debit line here. So our first account entry is going to be $1,000 for our cash, plus $3,000 for our accounts receivable, plus $13,000 for our equipment. And then we kind of skip down to dividends at $1,200, plus $4,000 for our salary and wages expense, plus our $1,000 rent expense. And let's see, did I do my math right there? Let's see. 3,000. Oh, you know what? Okay, wow. I just noticed that I actually listed our cash as 1,000 when it should have been 5,400. Excuse me, I'm sorry. So I'm sure most of you caught that at the very beginning of the video. I apologize. Yeah, that would actually be 5,400 as it's stated in the ledger. I must have just seen accounts payable and done that. I apologize. That's very embarrassing. Anyway, so let's kind of start over there and add that up. Anyway, so 5,400 plus 3,000 plus 13,000 plus 1,200 plus 4,000 plus 1,000. Okay, there we go. All right, so basically that is going to come to an amount of 27,600. I know that's the right answer because I've done this before, so that's how I knew. Anyway, so 27,600, and we will double underline that as kind of our final. Okay, now we come to the credit section, and if our math has been right and I've assigned the correct balances to the correct accounts, we should be in the clear. So on our credit section, we'll start at accounts payable, which will be 1,000, plus common stock, which is going to be 18,000, plus our service revenue at 8,600. And yes, it comes out to 27,600. So we'll go ahead and write that and double underline that. And basically that will be our trial balance for the Yeager Company on June 30, 2014. And so again, I apologize about assigning that incorrect account balance to cash and kind of messing that all up. But anyway, in the end, we got the right answer. Yeah, basically broke that down. If you have any questions, I guess we can comment and I will reply to those, and any feedback would be great. Thank you.